Hi guys, welcome back. In this video, we're going to be discussing the case study solution from May-June 2023, paper 22. And before I move on to the solution for the case study, I want you to pause this video and read the case study yourself and then come back on the video. The case study could be found in the description of this video below. Now guys, what I've written is that I've written a quick summary of what was happening in the case study. So we have a large population and abundance of natural resources for the country. The economy is obviously vulnerable. It's a poor country and affected by the pandemic, and major export is oil. There's increasing need stressed on diversification and targeting export markets to boost growth. In 2020, the country was hit because of a recession. You had the pandemic going on, then you had inflation also coming up in 2020 in this country. Budget deficit worsened for Nigeria, and then it talks about that towards the end of the case study, it says that there's increasing need stressed on improving your tax base and revenue collection and coming up with tax reforms and reforming the entire tax collection process to sort of improve your tax base, because already it says that the country is going through or suffering from a budget deficit because it has lower tax collections and higher government spending, right? And now let's come to the questions. So before we come to the questions, a couple of things, guys. First of all, whenever you're solving case studies, make sure that you end the case study in 35 minutes. So 35 minutes should be your ideal. I mean, if you're able to end it in 35 minutes, that is the best, but it shouldn't exceed 40 minutes. If it's more than 40, then you need to stop and move on to section B or section C, whichever section you want to do first, right? Also remember that do not take a lot of time in reading and understanding every line of the case study. Just quickly read through it once, right? And then you move on to the question, because if you see the question, you can refer back to the question. I mean, you can refer back to the case study as well to see which paragraph is relevant for which question, and you can read it again at that point. But students waste a lot of time in understanding and reading the case study properly, which sort of is not required, because generally you see only the first 2-3 questions are coming from the case study. If you see, a lot of times the last 2-3 questions are sort of general, and although they do touch upon what the context from the case study, but technically you don't need to sort of identify the answers from the case study itself in majority of the cases, for especially for the last few questions. So now the case studies, that the pattern would be 2 2 4 6 6. I mean, the last 2 questions would be for 6 marks. And so ideally, guys, so you see, I mean, these 2 mark questions, they need to be, I mean, you need to wind these up in 2 to 3 minutes. That's it. Also remember that in case studies, you are not supposed to write long answers. You need to be very short, to the point. There's no need for definitions. Just be to the point in the case study, right? And direct, specific, to the point. Just like in section B and C, when we write introductions and we write definitions, it's not required in case studies. Direct, specific, to the point, right? Also for these answers, and the answers in case studies usually go short. Okay, so you don't need to waste a lot of time, and that is one of the ways in which you will be able to complete the paper on time. Otherwise you will struggle in completing the paper on time, right? So for example, so if you see these questions, compare the budget balance using a PPC curve, consider the extent to which removal of fuel subsidy. This is a 4-mark question. Again, to the point, quick, short. So the only time that you should be taking ideally in a case study is the last 2 questions for 6 markers, right? So these 6 markers in the case study, you should spend the maximum time answering these questions. Otherwise, for all those questions, the first 4 questions that are of 2 and 4 marks, you should wrap them up very quickly. Also, guys, if you add these 2 questions up for 6 marks, they make up 12 marks, right? And this section makes up how many marks? This section makes up 8 marks, right? So you have ideally 8 marks over here, and then you have 12 marks over here, right? So make sure that you are spending approximately 20 minutes for these 12 markers, right? And you should wrap all these 8 markers up in and including the reading the case study in 15 minutes. That's your that is the ideal scenario. Okay, obviously you can go, I mean, 5, but so don't try to exceed more than 20 minutes for these 12 mark questions. Okay, so you can see the weightage, and I've seen a lot of times, for example, like the first question says compare the budget balance. It's a 2 mark question, so students would end up wasting 5 minutes of their time in understanding what this means, or what the question means. So if you're unable to understand this at the first go, leave it and move forward. Right, complete the paper, you can come back and you can then look at the question and solve it again. Okay, so these were some short tips that I wanted to give you guys. Now coming to the question, the first question says compare the budget balance of Nigeria in 2016 with the government's budget balance in 2020. Now although so this basically this question basically is regarding the government's budget balance, which means that whether the budget is in a surplus or a deficit or it's a balanced budget. And I already have a video on budget deficit and surplus on my YouTube channel. Make sure you watch that video, because in case studies they do give these references, and these indicators are mentioned in the tables, and then they ask you to sort of analyze the trend. And also there's a video on national debt as well. Make sure you watch that video as well. Okay, now comparing the budget balance of Nigeria in 2016 with the government's budget balance in 2020. Now we can see that if you look at the case, the budget balance is given as a percentage of GDP, which simply means that they have calculated the deficit and divided it by the GDP times 100. Okay, but if this deficit is increasing, it simply, if the budget balance as a percentage is increasing, it simply means that your overall deficits are going up. And it was also indicated in your case study as well that a deficit has worsened. But you're not supposed to write in the answer that a deficit has worsened, because it's already mentioned in the case. So just picking up what's written in the case and then writing that down will not score you marks. So you're not supposed to write that the deficit has worsened. But if you look at 2016, the budget balance as a percentage of GDP was 3.9%, which was negative 3.9%. Negative is indicating it's a deficit. So, and then in 2020 it was 5.2%. So if you compare the budget balance in 2016 with the budget balance in 2020, it simply shows that a deficit has increased. Right now, in your answer, you are not supposed to write the values. If you do not mention the values, that's okay. The examiner is not concerned with the values. Obviously the examiner can see for himself as well that it's 3.9% in 2016 and 2020 it's 5.2%. So the values are not important. The nature of how the deficit has changed is important, whether it has gone up or down. Here the examiner is concerned whether the student knows how to analyze whether it has increased or decreased, right? So what you will write is that the government, there's no definition, nothing at all. One line answer only one line answer, that between 2016 and 2020, we can see that the budget has increased, right? If you want to say, you can say from a negative 3.9% to a negative 5.2%, and that is it. The budget has increased. It was, in both the years, it was a deficit, and the deficit has increased, and that's the end of story, right? Now, part B of the question says, using a production possibility curve diagram, demonstrate the impact. Demonstrate means you just need to show, as in you need to model the impact, as in through a diagram. Demonstrate the impact of a rising level of unemployment on the Nigerian economy. It's a 2-mark question. You just need to draw the PPC curve and show what will happen. Obviously, there will be a movement inside the curve. You don't need to define what a PPC is. I've drawn it here, so you can see that initially your economy is at point A, and then you move to point B, because that's how you model unemployment of resources in an economy. So there would be a move. So there are two to three things that need to be considered. First of all, your axis should be properly labeled, consumer capital goods. You need to draw the PPC curve properly. It should be drawn concave. Usually remember that PPC curves are drawn, if it's not mentioned, it's a constant opportunity cost, you draw the PPC curve concave to the origin. Also remember that the axis of the PPC curve should be, as in the diagram, should be touching the axis, both the axes. It shouldn't be floating mid-air, right? And and you show the arrow that there's a movement inside the curve from A to B. You don't need to write anything. If you want to write it, you can just write this line, movement inside the curve, suggesting from A to B, suggesting unemployment in the economy, and that is it. You don't need to define what a PPC is, nothing at all. Be direct in the case study. You don't need to write the definitions or everything. Okay, so now coming to part C of the question, which says, consider the extent to which the removal of fuel subsidies in Nigeria would lead to an increase in inflation. Now, as far as this question is concerned, it says consider the extent. So we also need to mention when the removal of a fuel subsidy will not lead to inflation. Now, as far as when it could lead to inflation, you need to give a few reasons why removing fuel subsidies could be inflationary. And here is exactly where students would lose marks, as the only point majority will write is higher cost of production point, right? So we need to again remind ourselves that this is not an O level or IGCSE exam, and that we are giving an advanced level exam, and hence our depth of analysis should reflect that depth. And that is why students keep on losing marks in the AS exam, and that is why the AS thresholds are also very brutally low, right? Now, as far as this question is concerned, what we will write is there's no need to define what a subsidy is. Direct to the point, we'll say that the removal of fuel subsidies in Nigeria could indeed lead to an increase in inflation, which would basically be driven by a series of interconnected factors. So you could say that as the subsidies would be lifted, the price of fuel is likely to increase and spike. And the reason is that fuel subsidies lowers down the cost of production of fuel, right? And without subsidies in place, fuel production and suppliers would then need to pass on the complete cost of production to consumers, right? So that's what the analysis needs to be, that they will pass on the complete cost of production to consumers, resulting in higher prices of fuels at stations throughout the economy. And obviously the thing is that when fuel prices would go up, you need to understand that why it would be inflationary, because fuel holds a significant weight in the basket of goods that are used to compute inflation. And as a result, any substantial increase in fuel prices would proportionately contribute to the elevation in the overall inflation rate, because fuel itself represents a huge expenditure in the basket of goods that are used to compute the inflation itself, right? So this is the actual reason that you need to give. Just saying that cost of production would rise is simple IGCSE points, and this won't help you score any marks in the exam, or not substantial marks in the exam. Moreover, you also need to understand that when the fuel prices would go up, right? It's not that just the fuel prices would go up. This would, it's not that this would just remain there. And when the fuel prices go up, it's not that, only the fuel prices would be affected, because it will extend beyond the fuel sector itself, right? The thing is that elevated or higher fuel cost will trigger a domino effect. Do mention the domino effect. It will trigger a domino effect by increasing transportation expenses as well, which subsequently increases the prices of those goods that are reliant on transportation, right? And if the transport cost goes up, again, this leads to cost push inflationary pressures, because this domino effect is often recognized as cost push inflation, where increased input cost leads to price hikes across different sectors in the economy. So that is how the rise in fuel prices would spread throughout and across the economy, affecting the cost of production for various industries and sectors across the economy, and then leading to cost push inflationary pressures. Additionally, you could also talk about, the removal of fuel subsidies can also initiate a wage price spiral, because as prices increase due to increased fuel prices, workers may demand higher wages to counterbalance the rising cost of living, and such wage increase can in turn lead to more price hikes, which intensifies the inflationary pressures, right? So these 2-3 points you can mention, that to what extent would removal of fuel subsidies in Nigeria would lead to increase in inflation. But the key thing over here is that the thing that will help you score marks is your depth of analysis and the way it is explained. You have your answer, your explanation, the analysis should be clear and in depth. In depth basically means that in depth doesn't necessarily means in detail. In depth means that the chain has to be there, the proper chain and the interconnectedness of the points has to be there, right? But since the question says consider the extent, so obviously you need to mention 1 or 2 points, not necessarily a lot of them, but just mentioning 1 or 2 points as to when the removal of fuel subsidies could not lead to inflation. So you could say that, so you need to evaluate. So the evaluation could mean that in the next paragraph or the last paragraph you say that however the extent of this impact would depend upon certain factors. For example, it is possible that although when you remove the fuel prices, so the cost of production obviously is going up for many industries across the economy, but then you could say that it is possible that other costs or prices goes down. So other sort of cost of production, or maybe the prices in across other input prices could go down simultaneously for various reasons, which would reduce the overall inflationary impact on the economy. And then lastly, just write that moreover the extent of the impact would depend on the size of the subsidy as well, right? A large subsidy might lead to a more pronounced and substantial increase in prices and inflation throughout the economy, while a small removal, a large subsidy removal might lead to a more pronounced increase in prices in the economy, while a small a small removal, or the size of the removal is small of the subsidy, that might not impose any significant impact, or the impact might not be that much felt across the economy, right? Now, guys, the next question, part D, says assess whether using supply side policies is the best way to diversify the Nigerian economy away from its dependence on oil and natural gas exports. Now, the case is already talking about how the Nigerian economy is dependent on oil and natural gas exports, and how the economy is trying to come up with policies to execute that diversification. And the question is talking about that if we use supply side policies, so is it the best way to diversify away from its dependence on oil and natural gas? Now, as far as this question is concerned, guys, one thing which is very important that you need to understand is that the most common mistake students did end up making for this question was that they ended up explaining what supply side policies are, and they different and how supply side policies could benefit. Now, the thing is that you will not get marks unless and until you explain how those supply side policies will reduce the dependence on oil and natural gas exports for Nigeria, because that is the key thing that the question is asking you. Here you need to not just explain supply side policies, but explain how those supply side policies that you are mentioning in your answer scripts, how they will reduce that dependence that Nigeria already has since a long time on oil and natural gas exports. Only then you can argue in favor of the policy, because that's what the policy is trying to do here. And then, since obviously the question says assess whether questions require evaluation, then we will be required to evaluate whether supply side policies might not be the best way, and maybe suggest an alternative policy measures as well, or maybe not just an alternative measure, but in fact another policy that could be used in cooperation or together with supply side policies. Now, before I start telling what points we need to mention, we have to first, it is very important for us to identify what problem are we addressing. And the problem that we are addressing is the over dependence on oil and natural gas export. And the problem with over dependence is that it risks economies, and it is risking the Nigerian economy by making it vulnerable to recessions and downturns specifically. And do remember, it's not just about the Nigerian economy, it's for almost every economy that is over dependent on any product or commodity, will, if there are external shocks, is very much, it will be, or is and be will be very much vulnerable to external shocks. So that this is something that you need to know as far as a macro, being a macro student is concerned. Over-dependent economies, they struggle to diversify, and such economies also struggle in diversifying and obviously pivoting quickly enough to mitigate the effects of external shocks. And whenever such economies are faced with external shocks, it becomes very difficult for them to make way or pave way through those shocks and mitigate and reduce the effects of those external shocks, because probably such economies end up with a recession, and that is exactly what happened with Nigeria as well. So, and they struggle to diversify, and here and that is why the question is asking us to how could supply side policies help in diversifying because economies struggle. So how can those supply side policies that the government may implement may help the economy to make that diversification process smooth and simple, right? Now, you guys, as far as a macro, although you don't need to write all this in this answer, but as a macro student, you must be knowing what external shocks are, right? Because external shocks can result into economies into deep recessions and deep depressions and deep economic downturns with massive unemployment, because those economies are vulnerable, right? They are very much vulnerable and susceptible to such recessionary impacts, and they are very much vulnerable to such external shocks. But what are external shocks? And so external, written a few examples of external shocks, such as sudden collapses or disruptions in the financial markets, or maybe natural disasters such as floods and earthquakes, or maybe a pandemic like the COVID pandemic. And we know that how poor countries were specifically hit by the pandemic as compared to rich countries. And so maybe geopolitical events like wars, conflicts, and or maybe technological changes is also an example of external shocks, which involves, so let's say there's a rapid advancement or disruption. There's either a rapid advancement in technology or a rapid disruption in technology, such as maybe the advent of automation or artificial intelligence. And all of this can basically reshape industries, and they can if they reshape industries, they can either create winners or they can create losers. Maybe some countries would be winners while some would be losers, and losers would be more than those countries who were highly dependent on one commodity, and their entire focus and shift was in the specialization of a commodity or a product or a good. And basically, by creating winners and losers, it will obviously impact the employment patterns in those economies as well and those industries. And that is exactly why countries need to diversify, and that is how supply side policies can help in that diversification process. And that is what the question is asking us. Rather than you just explaining what supply side policies are from the book or the notes that you have studied, that is not the core context of the question. Energy price shocks could also act as external, external shocks, which exactly happened with Nigeria when the global oil prices fell because of the pandemic. So sudden spikes or drops in energy prices, which could be caused due to either natural disasters that could affect energy infrastructure, or maybe shift in global supply and demand dynamics that could shift the energy, that could cause changes in energy prices. They can have significant economic repercussions for countries, or maybe sudden spikes and drops in energy prices due to geopolitical tensions between countries, or maybe certain economic shocks could also, external shocks could occur because of environmental events, such as changes in maybe, let's say, rising sea levels, because of changing weather patterns. So anyhows, but the thing is that these shocks can have they can have different degrees of impact depending on factors such as how big this scale of event was, and also they could impact the resilience of the affected economies, especially those economies that are highly dependent or over dependent on something. They could be significantly impacted. And right, so guys, now coming on to supply side policies to diversify the economy away from its to reduce its dependence on oil and gas exports. So we all know what supply side policies are. Basically, they are economic strategies that are designed to improve the productive capacity and the efficiency of an economy by focusing on those factors that influence the supply of goods and services, basically. So they improve those factors that primarily affect the supply side of the economy. And so over here, basically, it's important that you mention that diversifying an economy away from its dependence from oil and natural gas exports is important for the country's long-term economic stability, right? Otherwise, the economy would always be vulnerable to economic shocks and ending up in recessions, right? And the reason is because over-reliance on a single commodity such as oil or natural gas can make an economy, just like I said, it could make an economy vulnerable to fluctuations in global commodity prices as well. So diversification helps to reduce the impact of price fluctuations on an economy. So policymakers in Nigeria can achieve this through supply side reform. This is how you need to. So first, you need to tell that okay, fine, diversification is important. Why is it important, and how can Nigerian policymakers do that? Through supply side reforms, basically. And then you could talk about, for example, you could say that investment in infrastructure. Now, we know that investment in infrastructure. You could talk about investment in infrastructure, and investment in infrastructure can help diversify the Nigerian economy, because development and improvement of infrastructure such as transportation, communication networks, energy systems, all these three would help attract investments and MNCs from abroad, which will multinational in that are foreign. It will help attract foreign direct investment from abroad, and the growth of multinationals, that is investment by multinationals, which will facilitate growth of those industries that are non-oil industries. So FDI and multinational investment would help facilitate growth of non-oil industries in the Nigerian economy. So you need to link about how the diversification will take place. You could say that moreover, policymakers can also end up providing tax incentives could be given, grants could be given, or maybe fundings could be given for research and development. But don't just mention them. You need to relate it through how the diversification process will, how this will help, implement and help the diversification process to take place. So you will say that the Nigerian policymakers can provide tax incentives, grants, and fundings for research and development, especially in non-oil sectors. So all of this is again going in or being done in non-oil and basically non-oil sectors. So this will again, and basically what this will do for the economy is that this will attract new businesses and encourage the existing ones. Not only attract new businesses, but also encourage the existing ones to invest in research and development and develop new technologies and products, right? Because all of this would help R&D, and then new technologies and new products would be developed. So again, diversification will take place. Additionally, new startups and small businesses will also be able to gain access to finance, or maybe the country could help microfinancing for these small startups, and which will help foster a culture of entrepreneurship, and again it will help diversifying the business landscape of the economy, right? Thirdly, you could also talk about how the government could invest in education and healthcare. How the government could invest in education and healthcare programs, which will again align with the needs of the emerging industries. So just don't say that the government should invest in education and healthcare. No, you should say that the government will invest in education and healthcare which aligns with the needs of the emerging industries. So because we need to come up with diversification, right? So all those emerging industries that are basically in sectors that are non-oil related sectors, and so all those emerging industries in the economy that have that growth potential and competitive edge, and we need to foster those industries and make sure that make them productively efficient. So the government could invest in education and training programs, especially in a way that aligns with the needs of those emerging, industry. That's a very important point that you should write in your answer. And again, what this would do is that this would help develop skills of the workforce. And again, don't just end there. Again, like I said, depth is important. Depth of analysis, writing the right chain of analysis is important. What this would do is that this would help develop the skills of the workforce, increasing their occupational mobility. What this would do is that it will help increase their occupational mobility, and improving in occupational mobility would again help allow them to contribute to sectors other than oil and gas. Because the occupational mobility will improve, the labor will be able to contribute to sectors other than oil and gas. So you see, you have to understand that if you just end up writing the government should invest in education and healthcare, marks will not be given unless and until you relate it with the diversification process and how it is going to help the Nigerian economy diversify. Understood? Then you could also say that Nigeria could establish. This is a very important thing that I want you to write this down as well. That Nigeria could establish special economic zones. Those special economic zones which favor with favorable tax and regulatory conditions to attract FDI, foreign direct investment, and then also encourage the growth of specific industries, which will obviously help in the diversification process, because because obviously those specific industries that you are trying to promote and foster would definitely not be related to oil sector, right? And by the way, if anyone is concerned with what, or anyone has the confusion of what this is, that is what special economic zones are. So special economic zones that are known as SEZs are basically designated areas in a country or within a country that offer special incentives and regulations. They offer special incentives and regulations to attract foreign investment and promote economic development. So you, as an econ student, you must be knowing this. So special economic zones are designated areas within a country that are offering special incentives and regulations to attract foreign investment and promote economic development. And what these zones do is that these zones basically relax a lot of regulations and procedures that hinder growth and that they increase costs for the firm. So they relax those procedures, and they also give tax incentives. And not only that, but infrastructure support is given as well, right? To encourage businesses to set up their operations in those special economic zones. And the aim is to boost exports, generate employment, and stimulate economic growth in specific regions in the country. So this is another supply side measure that would help boost or improve or make the diversification process easy and smooth and help the Nigerian economy to diversify itself. Now guys, obviously the question is requires evaluation when you're saying that assess whether using supply side policies is the best way. So obviously when you're talking about how supply side policies could result in this diversification to take place, reducing its dependence on oil and natural gas, you also need to tell the limitations of what supply side policies could bring about. And those, because the thing is that limitations of policies always reduce the effectiveness of policies, right? And if those limitations, because again, like I said, the thing about limitation of the policies will ultimately reduce the effectiveness depending upon how big and significant that limitation is. So you could say that using supply side policies to diversify the Nigerian economies to reduce the dependence on oil and natural gas has its limitations, such as you could, and here significantly the best limitation that you could talk about is time lags. Why? Because you see, the idea is that time lags would mean that it will take time for the diversification process to manifest itself, and then instead of using policies, and so the thing is that this is a very good limitation that you can mention, because it is reducing the effectiveness of the policy to make sure that a diversification process does take place. So although it will ultimately, but it will take a lot of time for that to happen. So you could say that there are a lot of time lags associated with supply side measures, and then explain what this means. You'll say that this means that supply side policies will obviously take a long time, to implement, and perhaps it can also take several years for the supply side, measures to yield results ultimately. And for example, education and training, if we take for example, so when policymakers would, invest in education and training by building new schools and increasing educational programs, what it does is that it sets the foundation for long-term economic development, and the effects of these investments would take time to manifest, and hence it might not immediately lead to diversification of the Nigerian economy, right? Also, you could say that, furthermore, shifting from heavily dependent, Nigeria is already a heavily dependent, oil-dependent economy, and shifting to a heavily oil-dependent economy to other sectors can involve substantial transition cost, such as retraining workers, reallocating the capital, and restructuring the industries. And these costs, you can write these down. It could involve substantial transition costs. It would involve the cost of retraining workers, reallocating capital, restructuring the industries, and these costs can impact short-term economic performance. Especially, it could lead to some unemployment in the short term as well, especially structural unemployment. So and then I think these limitations would be enough for a 6-mark question, and then in the end you will say that in conclusion, you'll end your answer by saying that in conclusion, while supply side policies can play a significant role in diversifying the Nigerian economy away from its heavily reliance on oil and natural gas exports, you'll say that they should not be considered a sole and exclusive solution. Now, you see, the thing is that a lot of students would end up say that yes, supply side policies is the best way, or no, the supply side policy is not the best way. This is not the way to conclude your answer by taking sides in your answer. Oh, you know what? This is the best solution. Oh, you know what? This is not the best solution. So instead, it depends upon focus on the way I'm writing in the exam. So what you will say is that supply side policies, although while do accept the fact that supply side policies can have a role or a good role, but don't say that they are the only solution. So you'll say that while supply side policies can play a significant role in diversifying, they should not be considered the sole and exclusive solution. The diversification efforts, they must be approached holistically, taking a lot of potential factors into account, right? So while supply side policies are, yes, important, they should be complemented. You will say that they should be complemented and assisted by effective demand side policies that stimulate consumer spending, domestic consumption, and overall economic activity. So right, so a balanced approach that combines supply side measures with efforts to boost consumer and business confidence, which creates a synergistic effect I mean, both the supply side synergistic effect means that both the supply side and the demand side policies are complementing each other and creating synergy amongst each other. They are not going in the opposite direction, both these policies. So that balanced approach that combines the supply side measures with efforts to boost your consumer and business, because when you're the see when you are going you these supply side policies will result in a transition. So you have to make sure that if this transition is taking place, this will result in some sort of temporary problems for the economy as well. So that must be complemented by effective expansionary demand side policies, right? So that balanced approach that combines supply side measures with efforts to boost that consumer confidence. You have to take your businesses into confidence into account as well. So measures to boost consumer and business confidence, they can create a synergistic effect, right? Encouraging the development of a more diverse economy and encouraging the development of a more resilient economy. That is what we were trying to do, coming up and creating a more diverse and resilient Nigerian economy rather than an economy that is vulnerable to economic shocks. Right, guys? So this basically ends part D. Okay, guys, so the last part of the question says assess whether collection of direct or indirect taxes is likely to be more effective in increasing the tax revenue collection by the Nigerian government. Now, obviously, it says assess whether, so we need to evaluate both these kind of taxes as well. And so there's an increasing need in the case study that we need to come up with these tax reforms, and we need to improve the tax revenue collection because the country is already going through budget deficits due to not only higher government spending during COVID but lower tax revenues as well. And all of this, basically, when you have a budget deficit, that just adds to national debt, right? Because the government then needs to borrow to finance those deficits. So the thing is that we need to, and so the question is saying that which of the two if adjustments to which of the two would basically increase the tax revenue collection, or which would be the most effective, right? So we need to tell here both the pros and cons for direct and indirect taxes, and then we need to come up with a conclusion. So obviously, we know what taxes are. Taxes are, compulsory financial charges that are imposed by the government on individuals or businesses and other entities to, generate revenue for the government and to finance the government expenditures such as funding public services like education, healthcare, infrastructure. And taxes are basically broadly defined in two categories, that is direct taxes and indirect taxes. And when we talk about these direct taxes, basically, direct taxes are basically levied on, they're imposed, or they are basically levied directly on individuals or entities that are typically based, and basically they're typically based on, their incomes, their wealth or property. So direct taxes, and that's why, we label these taxes as income tax, wealth tax, property tax, and they're levied directly on individuals or their entities, or as in, other entities. And direct taxes, especially, let's say income taxes, they are progressive in nature, right? And when we say that they are progressive in nature, it means that they progress with incomes, and it means that higher income individuals or entities, they end up paying a higher percentage or proportion of their income in taxes. That is, higher tax burdens falls more on the rich than the poor. And this contributes to higher tax revenue collection, especially from the wealthier segments in the population. So in this case, yes, it could be a good policy because if you so increasing the more direct taxes such as income taxes would result in more higher tax revenue collection from the wealthier segments in the society. And also, direct taxes such as income taxes, they tend to be more stable over time compared to indirect taxes, right? Because the reason is that direct taxes are tied up with individuals' incomes, which is less volatile than their consumption patterns, while indirect taxes are these are indirect taxes are also your expenditure taxes. So when you spend, you pay that indirect tax, while direct taxes would be in that sense more stable because consumption patterns are more volatile than as compared to incomes. So this will basically provide certainty to policymakers regarding the tax collection over the entire year, and hence this will facilitate the planning process and make the tax collection for the Nigerian government more effective and increase the tax collection, increase the tax base. However, you will also talk about the effectiveness of this, and you will say that the effectiveness of direct taxes could be hindered and reduced by things such as tax evasion and tax avoidance. You could say that tax evasion and tax avoidance, both of this, could hinder the effectiveness of direct taxes, and tax evasion and tax avoidance is so. Which will undermine the revenue raising potential of direct taxes. So we are basically commenting on how the revenue collection from direct taxes would increase, and you could say that if there's tax evasion and tax avoidance, this could undermine the revenue raising potential of direct taxes. Also, the problem is that because if you have a large informal economy, because this is the problem with Nigeria, that they have a large informal economy, so and informal economy is undocumented or shadow economy. So imposing taxes and if the informal economy is generating millions in revenue and incomes and profits, then much of that goes undocumented, and so it's very easy to avoid taxes from the incomes generated by the shadow economy or the informal economy or the undocumented economy. So in that context, you could say that the effectiveness would reduce if you have a large informal economy of direct taxes, right? And in addition, you could say that if the government adjusts and increases direct taxes, if you're saying that yes, direct taxes would, especially progressive taxes, would help to increase tax revenue collection. But the problem is that direct taxes, if the government increases direct taxes, this can basically potentially cause economic distortions. It could distort economic outcomes because it then becomes counterproductive. Why? Because high tax rates on income, especially on high income earners, can create a disincentive to work. Not only that, it can create a disincentive to invest and disincentive for entrepreneurship, which will reduce investment in entrepreneurship in the economy, which will reduce economic growth then as I falls, and as investment levels in the economy would go down, AAD would decline and growth will decline. And when growth and GDP goes down, so would your tax revenues go down as well, which will reduce the overall tax revenue collection. However, so you saying that, okay, fine, tax revenue collection would go up when direct taxes increase, but then all of these, if it becomes counterproductive, if direct taxes so the way to say it is that they become counterproductive. So if they distort economic outcomes, and if they become counterproductive, then tax revenue collection would decrease, reducing the overall effectiveness of this policy reform to increase tax revenue collection. Then you talk about indirect taxes, that what indirect taxes basically are those taxes that are levied on expenditure of the people on goods and services, such as VAT and GST. And indirect taxes, the thing about indirect taxes are that they're applied to a wide range of goods and services which are consumed by a large portion of the population, and this then provides a broad tax base. The indirect tax, and the thing about indirect taxes is that it itself provides a very broad tax base, and this broad tax base has the potential to increase revenues generated from these taxes by the government then, right? So so furthermore, indirect taxes then can be applied on. So the thing is that the thing about indirect taxes are that indirect taxes are more challenging to evade as well as compared to direct taxes, because they are tied up to transactions that involve multiple parties, that is buyers and sellers. So they are difficult to evade because they are tied up to transactions that involve multiple parties, that is they are tied up to transactions that involve both buyers and sellers. So obviously it's difficult to evade then. And this, as a result, then contributes to improved compliance, and rather than tax evasion and and tax avoidance. In fact, this could then contribute to higher compliance and as a result, higher tax revenue collection is collected then, right? So, but the problem with indirect taxes are that they are regressive in nature, meaning that they impact low-income individuals disproportionately. And what do you mean by they impact low-income individuals disproportionately? It means that they affect more. The burden of tax falls more on the poor than the rich. That is, the burden of tax falls more on the low-income groups than the upper-income groups. That creates inequality of incomes, inequality and inequity of incomes in society. So policymakers then, as a result, because this creates inequality, or this creates an unequal income distribution, then policymakers basically, they sort of often need to address these equity concerns through exemptions and reduced tax rates for essential goods, which can potentially reduce the effectiveness of the overall tax collection then. Because what's happening is that since indirect taxes are basically causing equity issues in society, because it creates inequality of incomes in society, then in order to mitigate the effect of inequality, then policymakers would come up with reduced tax rates for other, or reduced taxes for essential goods, which will, so on one hand you're increasing indirect taxes, but then you're reducing taxes on some essential goods and services, which is overall it's offsetting the effectiveness. It's offsetting the tax revenue collection then, which reduces the which potentially reduces the effectiveness of indirect taxes in increasing the tax revenue collection. In that context, it reduces the effectiveness, right? And hence, in that, so basically for indirect taxes, you have a broad tax base. So in that sense, you can generate significant tax revenues, because, like I said, you have a broad tax base, which means that value-added tax or sales tax, they can, like I'm saying, they encompass a wide range of goods, and that can generate significant revenues. And also the administration of indirect taxes is also very easy, as in comparatively easy as compared to direct taxes, because they are easier to administer and enforce compared to direct taxes. Because tax collection can be, let's say, you could say that tax collection can be automated at the point of sale, which reducing the compliance costs and, let's say, the administrative burdens for not only the taxpayers but the tax authorities as well, right? If you automate the entire tax collection process at the point of sale. So in that sense, and also you could say that many essential goods and services that are subject to indirect taxes, such as food, fuel, and utilities, if you impose indirect taxes on them, they have inelastic demand. So obviously consumers would end up buying them, even if the prices are higher. So which means that if the prices have that an increase in prices because of indirect taxes imposed on those goods, they will have limited impact on consumer behavior, right? So adjusting indirect tax rates on these goods, which that is adjusting them in the sense that increasing indirect taxes on these type of goods with an elastic demand, can therefore lead to significant tax revenue gains with minimal changes in consumption patterns as well, right? But then again, the regressive impact could be counterproductive and could lead to inequality and could lead to social unrest and poverty. Relative poverty would increase basically. And as far as one point I forgot to mention about direct taxes was that, as far as direct taxes, the fact that you adjust direct tax rates, or you adjust the direct tax rates in the sense that you, by adjusting direct tax rates or adjusting the thresholds of the direct taxes, that is the income tax bands, you can actually target high income earners and profitable businesses, potentially increasing your tax revenue collections, and without really significantly impacting lower income households. Because what you're doing is that because they're progressive in nature, so they wouldn't cause income inequality, because you are targeting high income earners, and you could significantly collect high tax revenues from these high income earners and high profitable businesses. And also direct taxes are more transparent, right? Okay. And because the thing is that, in the sense that taxpayers can actually they are more transparent in the sense than indirect taxes, because taxpayers can directly observe the tax that they are paying on their incomes or profits. So this transparency will enhance public trust and compliance with tax obligations then, which will reduce tax evasion and avoidance. In this context, you could say that since direct taxes are generally more transparent, because if I am paying my income taxes, I know they're going to the government, right? So in that sense, it will basically create more public trust and compliance with tax obligations. And so then you need to conclude your answer, but in your conclusion, you don't necessarily have to take a stance by saying, okay, fine, the direct taxes would be more effective or indirect taxes would be more effective, because both have their own pros and cons, right? So, and both are equally important in generating tax revenues. So a good conclusion could be that you say that to conclude, or overall, the effectiveness of direct taxes and the indirect taxes in increasing tax revenue collection by the Nigerian government actually depends on the taxpayers' compliance, because this is a very important factor. It would depend upon the taxpayers' compliance. So higher levels of taxpayer compliance, meaning that individuals and businesses, they accurately report their incomes and they accurately report their profits and pay taxes are very much essential for maximizing revenues, especially coming from direct taxes. So if you want your direct taxes to end up giving you more revenues, taxpayers compliance and accurate fair reporting of your income and profits is very much essential for high revenues generated from income taxes and for high revenues generated from income taxes and corporate taxes. And the effectiveness of indirect taxes in increasing tax revenues would also depend upon the PD for goods and services. So tax revenues, as far as indirect taxes are concerned, would significantly increase, especially if they are imposed on those goods with an inelastic demand. So in that sense, yes, tax revenue collection would significantly go up, and but if the PED is elastic, right? If the PED is elastic and that taxes are imposed on those goods, it would, fail to achieve their intended purpose, and tax revenue collection would be significantly less, because if the PED is elastic, then consumption would go down. And if the consumption goes down because of higher prices, then tax revenue collection would go down. Hence, you could end your answer by writing this line that policymakers need to sort of carefully consider these factors when designing and implementing the indirect tax policies to increase if the objective is to increase tax revenue collection by the Nigerian government. Right, guys? So I hope you understood this and you enjoyed the case study as well. If you have any queries, you can mention in the comments and I'll get back to you. Until then, take care.